Hello friends, our today's topic is GST on discounts. Today we will discuss cash discount, turnover discount and discounts which are given against some obligations. Section 15 of GST defines that value of supply shall not include any discount if discount is given before or at the time of the supply. That is, discount is deducted from the value of invoice. And if discount is given after supply, then if these two conditions are fulfilled, discount was agreed at the time of supply or before supply, and this discount can be linked to the invoice, then ITC has to be reversed by the recipient or buyer. Then discount is GST can be reversed on discount. If discount is not agreed at the time of supply or before supply, then we cannot deduct discount from the GST calculation. Now we can get it with example. If discount was given at the time of supply or before supply, then its value will be reduced from the value of invoice and GST will be levied on the net value. For example, if there is an item of 50,000 and there is discount of 50%, then basic value will be taken as 25,000 and 18% GST on that will be 4,500 only. Now the main issue is of post sale discounts and details of GST on this discount. Post sale discounts are those discounts which are given by the supplier or seller after the sale has been effected. This means that no discount has been mentioned in the invoice and this discount was passed on to the buyer later on. These discount of three types. First, discount was agreed at the time of supply. Discount was not agreed at the time of supply, and third condition is that discount is given with additional burden to do some act. Now if discount was agreed at the time of the supply, then supplier has to issue a GST credit note to the recipient or buyer. Then a recipient has to reduce amount of GST as mentioned in the credit note from the input tax credit already availed, and he has to raise a debit note to the supplier. Here the discount, we can say that discount terms are agreed at the time of the supply or before supply. Input credit has been reversed by the recipient as he has raised the debit note, and such discount can be linked to that particular supply or invoice. Here the main catch is that credit note has to be issued within 6 months from the end of the financial year of the sale invoice, and supplier can also raise a commercial note without entering GST. Then buyer has no need to reverse GST. Here we want to say that reversal of GST is optional for the supplier. He can reverse GST or he has the option to reverse GST if he wants it. Otherwise he can raise a normal credit note also. Discount not agreed at the time of supply. If discount was not agreed at the time of supply, there are some categories like sometimes bulk discount is given for the bulk quantity or early payment, or there is a price reduction, but these terms were not agreed at the time of supply, then GST cannot be reversed by the supplier and he has to just raise a commercial invoice only. And if in this case the recipient has no need to reverse the GST input, he can take the full GST input against this credit note. And sometimes there are some discounts on fulfillment of obligation, like some sale drive has to be made by the buyer or he has to run some advertisement. In these cases the supplier sends a credit note. Supplier cannot send a credit note to the buyer, and buyer has to raise a separate invoice for these activities and he has to charge GST on this. Here this activity of some obligation is taken as a different transaction, and in this transaction the buyer is providing some service to the supplier, and then supplier has option to get the GST input against this. Now we can with this help of this chart we can learn it very easily. Post sale discount with purchase volume on timely payment or anything. Events or conditions exist at the time of the sale, then seller can reverse GST and buyer has to reverse GST input with debit note. If events or conditions do not exist at the time of the sale, seller cannot reverse GST and there is no need for buyer to reverse GST input also. If there is an additional burden to fulfillment some obligation on the hand of buyer, then buyer will raise a invoice or debit note and charge GST. Some practical problems are there. If there are some major discounts on annual purchase or achievement, when year adopted in the agreement is different from financial year, just like we are giving discount on January to December purchase, then purchases which are for the period of October to December, in those there will be practical problem in calculation. Or if there is cash discount or bad debts are booked in for settlement of dues, then GST cannot be reversed. And sometimes discount is based on after sale service activities, then these are of third category, and here the buyer has to raise a separate invoice for these activities. Thank you.